Good day from ADK Wealth Advisory Group, home office in St. Louis. My name is Dan Davis, president and co-founder. Our purpose today really is to look back into first quarter 2017 and then to look forward into second quarter and beyond. When I really look back, I look at some areas like the equity markets, the fixed income markets, gold, let's just call it commodities, as well as real estate. So let's take them in that particular order. If you take a look at the U.S. equity markets, January and February were really solid. There's a song that has the line, "Oh, sunny days." And when I take a look at February, living in St. Louis all my life, I got to tell you that there wasn't a better February with days over 60 degrees. And the market posted some really good solid returns. And it was probably the first time since the market debacle of '08 that we saw many other arenas do even better than the U.S. markets. EFA, Europe, Asia, Far East, as well as Asian emerging markets did quite well. But then all good things have to come to somewhat of an end, and March 1st sort of marked the pinnacle or the peak of the U.S. S&P 500 when you look at charts. And so then they started singing the blues. March has been a very, very rainy month throughout St. Louis, and we've kind of seen that in what we call a market consolidation. In English, what it means is the markets kind of go sideways. They never go just perfectly sideways. This market's been sideways with a downward bent. When you then transition and you go to the fixed income markets and you say, what's happened there? Nothing really exciting or even unanticipated. The Fed raised rates, they did a great job of sort of showing their cards and letting the markets know. The rest of the developed world, Europe, Japan, pretty much has stayed the course with their central bank policies. And then in places like China and Brazil, you've seen tightening, which is what they've needed to be doing. When you transition into the commodity world, gold has done quite well. It's interesting in that it had really not done that well over the previous several years. So we're starting to now see a comeback. When you then take a look at oil, oil's probably the most important of all that because it drives so much with the world economy. And you saw 2014 summer all the way through 2015 where oil just plummeted from 110. And this whole concept of fracking has been a game changer. And it's my opinion that oil has now found its new trading range, whereas before it was more like 85 to 110 a barrel. Now we're seeing it's more like low 40s to mid 50s a barrel, which has really dramatic effects on the economy throughout the world. And then the real estate market itself, when you take a look at that, the real estate markets had a headwind from rising interest rates in the U.S. and resulting in really a kind of a flat market. If I were to go back to the commodities area, the one thing that is probably my favorite commodity is coffee. And unfortunately, coffee is somewhat of an irrelevant trading agricultural product. So we'll just have to stick to drinking coffee and not really invest in it. For those of you who don't actually come to our office because of where you live, we grind our own beans fresh every day, and our coffee is quite good. We take coffee very serious. As we think about improving productivity, I believe that coffee increases my personal GDP. In any case, as I start to look forward, when I look forward, I look at things like economies, corporate earnings, valuations, trends, politics. Kind of those 5 things are things that we really evaluate closely. When I take a look at the economies, if you break it into 2 areas, GDP and the risk of recession, LPL's done a great piece on what they've titled as Recession Watch. Depending on how you get this video, the Recession Watch is right below the video itself as a link inside of our discoverindependence.com. So if you get this through Facebook or LinkedIn, go to discoverindependence.com, check out the media area, and it's right in there. Quite outstanding. But you could summarize it by saying the risk of a recession in 2017, super low. It's actually the first time when you do GDP and you take a look at the U.S., you take a look at Europe, you take a look at Asia, Latin America, we've got more economies pushing forward in positive direction than what we've seen in close to a decade. Now, when I shift gears and I go to corporate earnings, very, very similar theme. The U.S. in the first quarter, when we looked at earnings, you saw about an 8% earnings growth, which is good. It's not great, it's good. When you take a look at Asia, it was about double that, and that is great. When I take a look at Europe, Europe's not even good, but it's the first time in a while that it hasn't been bad. So it's pointed in the right direction. Again, the first time since the financial crisis that we've seen this kind of global positive direction. Valuations, not so much. When I take a look at the United States, our markets are overvalued both in historical terms and in terms of how I view it relative to interest rates and PE ratios. It's not grossly overvalued, but it's overvalued. When I take a look at Asia, Asia looks to me to be a much more attractive place valuation-wise. Even Europe looks better when I take a look at valuations. When I do politics, though, European politics are a mess. If we think ours are bad, theirs are worse. When I take a look at what's going on at a sort of a macro trend, and it's really a major issue going forward, it's this battle between free trade and nationalism. And if you oversimplify it, the developed worlds benefited going all the way back to the early 1900s, actually probably even post-Civil War, from free trade, especially post-World War II. But now the middle class of the developed world is having a very difficult time, really since the late 80s, competing with the emerging markets' cheap labor. And so now you have this clash that's going on. No one really knows how it will go, but Brexit and Trump, both of those want the route of nationalism. When you take a look at the election that happened in the Netherlands, it went the route of free trade. We still have elections in France, Germany, possibly Italy, and then we have Turkey going through not necessarily an election, but a referendum of trying to give Erdogan a lot more control by changing their constitution, which would probably be very bad. So I would summarize it by saying politics are always messy, but they're particularly messy right now because of this battle between free trade and nationalism. And then the geopolitics of things like Russia, ISIS, radical Islam, they're always there. They don't always have those same headlines, but if you look throughout history, geopolitics is always a weird spin that you don't know how to measure what that risk is, and it's always a risk. When I look at trends, I'd say that the trends are positive. So if I were going to sum up looking forward for Q2 and beyond for the calendar year, a theme that we used earlier in videos in past was lower for longer. We expect positive returns. We expect, like LPL's research team, we expect equities to have mid to high single-digit returns. Fixed income, we expect to have low single-digit returns. So when you combine that together, it's that lower for longer theme. It's not like we're going to see the big double digits that we saw in the 80s and 90s, and I don't think any of you expect that. We do expect to have more volatility in the coming 18 to 24 months, kind of like what we've seen in the last 24, where we've seen some pullbacks that were what I call normal volatility. Pullbacks normal don't feel good, but we don't expect a collapse like we saw in 2000 or 2008. In summary, if I look back at Q1, we talked about the Oh Happy Days. And when I look forward and we talk about singing the blues, it wouldn't surprise me in Q2 that we really expect a continued consolidation for a while until some of the political stuff within the U.S. gets worked through. What I mean by that is when the Republicans can actually get something done. So far, they've stumbled along in the transition of power. But when I look at 2017 as a whole, that theme of lower for longer with positive returns is what we expect. Some personal issues around health for me that I wanted to communicate to you. When you hit 50, as most of you know, as a man, you go through a whole bunch of these medical exams. I had the fortune, I guess, of having great medical care, but as a result of that process, I found out that I have prostate cancer. The good news is that they found it very early. The bad news is that I have cancer. So what are the steps going forward? As a person who does risk management for a living, I've kind of evaluated if I take some of the treatment that's less invasive and has lower potential side effects, the risk of it coming back and me having to deal with it later is higher. If I deal with surgery, there's higher side effect risk, but then there's lower risk of it coming back. So I don't know how many of you know about Gleason scores. My Gleason score is very positive. So April 10th, I'll be having some surgery. I'll probably be out of the office a week, then working from home a little bit the following week, and then back in the office week 3. So as I said, the bad news is I have cancer. The good news is that they found it very early. We'll have surgery to get it wrapped up. So I appreciate your prayers. Again, the date for surgery is April 10th. And while I'm out, Sam and Rich will be here to take care of everything. I'd like to thank you for your prayers, thank you for your business, and we'll sign out from St. Louis. Have a great day.